Have you seen the recent headlines talking about a new $6,000 stimulus connected to President Trump and quietly wondered to yourself, is this really something meant for people like me? Or is it just another confusing promise that sounds bigger than it really is? If you're over 60, living on Social Security, a pension, or your retirement savings, that question matters. It matters because misunderstanding this one issue can either create unnecessary stress or lead you to believe something is coming that may not apply to you at all. My name is Sara, and for more than 10 years, I have helped American seniors make sense of complicated financial changes without panic and without politics. I understand how unsettling it can feel when headlines move faster than clear explanations, especially when your income is fixed and every decision matters. Today, I want to slow everything down with you. I want to gently clear away the noise and walk you through what this $6,000 benefit really is, who it is meant for, and why it is being talked about in a way that has left so many retirees confused and uneasy. My goal is simple. By the end of our time together, I want you to feel calmer, clearer, and more confident about how this change may or may not affect your own retirement. There is no rush here. There is nothing you need to sign up for today. This is about understanding, not urgency. And understanding is one of the most valuable tools you can have in retirement. Let's begin by clearing up the biggest misunderstanding right away, because this is where most seniors get tripped up. Despite what many headlines suggest, this is not a $6,000 check that suddenly shows up in your mailbox or your bank account. It is not a monthly payment, and it is not something that everyone automatically receives just because they are retired or collecting Social Security. Instead, this change comes in the form of a tax deduction. And I know that may sound less exciting at first, especially when you hear the word stimulus. But for certain seniors, a deduction like this can still make a meaningful difference, especially when tax season arrives. The reason this is being described as a stimulus is because deductions are designed to leave more money in your pocket by reducing how much of your income is taxed. Over the years, many retirees have found that their income slowly creeps higher, even though their lifestyle has not changed. Social Security benefits increase modestly. Required withdrawals from retirement accounts begin. Some people take on part-time work or receive a pension, and suddenly, taxes become part of retirement in a way they did not expect. Many seniors have told me the same thing over the years. They say, "Sara, I thought once I retired, things would be simpler." And it is completely understandable to feel that way. Unfortunately, between Social Security, pensions, retirement account withdrawals, and other income, more retirees than ever are finding that they owe federal income taxes when they never had to before. This $6,000 deduction is designed to help ease that burden, but only for seniors who meet certain conditions. And that is why clarity matters so much here. This benefit does not hand you money directly. Instead, it reduces the amount of income the government uses to calculate your taxes. For some seniors, that means owing less at tax time. For others, it can help protect a portion of their Social Security benefits from being taxed. And for some people, it may not apply at all. And that is okay. Knowing where you stand is far better than worrying about something that does not actually affect you. Another reason this topic feels overwhelming is because it has been blended together with other news. Healthcare changes, Social Security updates, and political debates are often discussed at the same time. When everything is mixed together, it becomes hard to tell what is new, what is old, and what is still being discussed rather than finalized. So for the rest of this conversation, I want us to take things one step at a time. calmly and clearly, the same way I would explain it to a friend sitting across the kitchen table. No jargon, no pressure, just steady, clear information. Here is what matters most right now. If you're 65 or older and your total income has reached a level where taxes are starting to affect your retirement comfort, this deduction may help you keep more of what you have earned. It does not change your Social Security benefit itself. It does not increase your monthly check, but it can change how much of that benefit is counted as taxable income. Even when the numbers do not look dramatic on paper, the impact can feel very real when you are living on a fixed income. A few hundred or a few $1,000s less in taxes can mean less stress, fewer trade-offs, and more breathing room. As we continue, I want you to listen with curiosity, not worry. You do not need to take action today. You do not need to call anyone or respond to any message. All you need right now is understanding, because when you understand how these changes work, you protect your peace of mind. And peace of mind in retirement is just as important as money. Now let's talk about who this $6,000 deduction is actually designed for, because this is where the answer becomes more personal. To qualify, you must be at least 65 years old. That age requirement is important. This deduction is specifically tied to being a senior. The deduction applies at the individual level. That means if you are single and you meet the requirements, it can be up to $6,000 for you. If you are married and both you and your spouse qualify, it can be up to $6,000 for each of you. In other words, a married couple could potentially benefit from a larger combined deduction. But age alone is not enough. Income plays a very important role here, and this is where many seniors feel uncertain. This deduction is aimed primarily at retirees whose income is high enough that they are already paying federal income taxes, but not so high that deductions no longer make a meaningful difference. In simple terms, this is most helpful for seniors who receive Social Security and also have other income. That other income might come from a pension, IRA withdrawals, 401k distributions, annuities, or even part-time work. When these income sources are combined, taxes can start to apply in ways that feel surprising. Here's an important point that often brings relief. If your income is lower and you already owe little or no federal income tax, this deduction may not change your situation very much. And that does not mean you are missing out. It simply means the tax system is already recognizing your limited income. On the other hand, if your income has quietly crossed certain thresholds over the years, this deduction can help pull you back into a more comfortable tax position. The income limits are based on something called modified adjusted gross income. You do not need to memorize that phrase. Think of it as your total income after certain adjustments before deductions are applied. As of now, this deduction becomes especially relevant for individuals with income above $75,000 or married couples filing jointly with income above $150,000. These figures help explain why this change does not affect everyone in the same way. It is also important to understand how this deduction is claimed. You do not apply for it the way you would apply for a benefit or an assistance program. There is no office to call. There is no form to request in advance. This deduction is claimed when your taxes are prepared either by you or by a tax professional. It is also temporary. It applies only to specific tax years. That means it is not something to rely on forever, but rather something to be aware of while it is available. Awareness, not urgency, is the key here. Now let's talk about an area that affects seniors emotionally as much as it does financially. How this deduction can interact with taxes on Social Security benefits. Many retirees are surprised to learn that Social Security benefits can become taxable once total income reaches certain levels. This does not mean your benefits are being taken away. It simply means that a portion of your benefits may be counted as taxable income when everything is added together. As costs rise and retirees rely more on withdrawals from savings, more seniors are crossing these thresholds than ever before. This is where a deduction like this can quietly help. By lowering the amount of income that is considered taxable, it can reduce how much of your Social Security is exposed to taxes. For some people, that means owing less overall. For others, it can mean staying below a line that would have caused a larger portion of their benefits to be taxed. Imagine your income is just slightly above the level where Social Security taxes increase. A deduction like this can gently pull you back below that line. It does not change your benefits, but it can change how the tax system looks at your income. For married couples, this can be especially meaningful. When both spouses receive Social Security and also draw from retirement accounts, income adds up quickly. Even modest withdrawals can trigger taxes unexpectedly. That is why understanding deductions matters so much in retirement. It is not about finding loopholes. It is about using the rules that already exist to avoid paying more than necessary. I want to reassure you of something important here. This deduction does not reduce your Social Security check. It does not change what you are entitled to receive. It only affects how income is taxed. If you receive a pension, a lump sum payment, or an increase in benefits due to recent changes, it becomes even more important to pay attention. Higher income in one year can lead to higher taxes than expected. This is often where stress comes from, not because something is wrong, but because the change was unexpected. This deduction is not a magic solution, but it can be a helpful tool for those who qualify. The most empowering thing you can do is understand how these pieces fit together so tax season does not feel like a surprise. There are also other tax changes happening alongside this deduction that are worth understanding. One of the most meaningful for seniors is the increase in the standard deduction. This is the amount of income the government automatically allows you to earn before federal taxes apply. For many retirees, a higher standard deduction means less paperwork and, in many cases, less tax owed. When this larger standard deduction is combined with age-based deductions like the one we have been discussing, the overall effect can be stronger than many seniors expect. It may not feel dramatic, but it can be steady and meaningful. And in retirement, steady relief matters. Another reason this matters is because many seniors are required to take withdrawals from retirement accounts once they reach a certain age. These required withdrawals can push income higher even when spending has not increased. That is why so many retirees feel confused when their taxes go up despite living modestly. These changes do not mean you have done anything wrong. They reflect how retirement income is structured today. Understanding that structure helps you stay ahead of it instead of feeling caught off guard. There is also an emotional side to all of this. After decades of working, saving, and planning, many retirees expect life to feel simpler financially. When taxes suddenly feel more complicated, it can create anxiety and frustration. That is why I always encourage seniors to view changes like this not as something to fear, but as something to understand. When you know what applies to you and why, you regain a sense of control. You stop reacting and start planning calmly, even if that planning is as simple as asking a few thoughtful questions during tax preparation. There is another group of seniors I want to acknowledge because they are often overlooked. Retirees who receive pensions from work that did not fully participate in Social Security. For many years, certain rules reduced or eliminated benefits for people who also received these pensions, even though they paid into the system earlier in life. Recent changes have addressed some of those issues. Many of these retirees are now receiving benefits they earned, sometimes in the form of higher monthly checks or lump sum payments. That is positive news, but it comes with an important reminder. Any increase in income can affect taxes. If you suddenly receive more income, you may temporarily find yourself in a higher tax situation. Deductions like this one, along with higher standard deductions, can help soften that impact. What I want you to take away is this: retirement income today comes from many sources. Each one interacts with the tax system in its own way. When changes happen, uncertainty is natural, but uncertainty does not have to turn into worry. Let's address a few common misunderstandings because this is where unnecessary stress often begins. One misconception is thinking that qualifying for this deduction means taxes will disappear. That is not how it works. This deduction can help, sometimes significantly, but it does not eliminate taxes entirely for everyone. Another misunderstanding is believing that everyone over 65 automatically receives the full benefit. Eligibility depends on income, filing status, and timing. And one of the most important points of all is this: you do not need to rush or respond to anyone about this deduction. If anyone contacts you claiming they can activate or unlock this benefit for a fee, that is a red flag. The government does not call you to offer deductions. It does not ask for personal information to qualify you. This deduction is handled only during tax preparation. When financial news spreads quickly, misinformation and scams often follow. Please remember to pause if something sounds urgent or threatening. Real financial changes do not come with pressure. So, what should you do next in a calm and practical way? First, simply be aware of your age and your income sources. Second, when tax documents arrive, especially your Social Security forms, do not ignore them. They are tools, not judgments. If you work with a tax preparer, make sure they understand your full situation. If you prepare your own taxes, go slowly and review senior-related sections carefully. Most of all, do not let headlines steal your peace. Retirement should feel steady, not stressful. Understanding this $6,000 deduction is not about chasing money. It is about clarity. As we close, I want to leave you with this: financial changes like this are not emergencies. They are information. And information, when understood calmly, gives you strength. You have spent a lifetime building stability. You deserve clarity now. Take things one step at a time, and remember that protecting your peace of mind is one of the most important parts of retirement.